Good afternoon. If I could have your attention, please, and a little less volume. I'm Mark Aronoff. I'm Distinguished Professor of Linguistics and Senior Advisor to the Provost, and it is my pleasure today to welcome on behalf of Stony Brook and also to introduce Mary Ellen Iskenderian. Maybe before I introduce Ms. Iskenderian, I just wanted to put in a word for the next Provost lecture. So this is a Provost lecture. The Provost lectures are sponsored by the Office of the Provost and sometimes by other organizations, as this one is. And these are university-wide lectures that are meant to appeal to broad academic interest. The next lecture will be next Wednesday at Campus Lifetime, which is 12:50, and it will be Professor Malcolm Bowman who will be talking about tsunami. And so for those of you who are worried about the next tsunami on Long Island, you should come to that lecture so you know how to prepare yourselves. Mary Ellen Iskenderian is President and CEO of Women's World Banking, WWB, not to be confused with WWE, the world's largest network of microfinance institutions and banks. WWB members are diverse in geography and structure, but united in the belief that microfinance must remain committed to helping poor women access innovative financial products, services, and information. Ms. Iskenderian has spoken widely on microfinance at such institutions as Harvard, Stanford, and the Wharton School at Penn, as well as at international and national forums, including the Clinton Global Initiative annual meeting and the Council on Foreign Relations. Some recent awards, among many, include the 2009-2010 NYU Stearns Distinguished Citi Fellowship in Leadership and Ethics, and the 2009 Isabel Benham Award from the Women's Bond Club. In today's lecture, Ms. Iskenderian will discuss how microfinance can help women from developing countries to build successful businesses, protect assets, and improve their lives and the lives of their families. Ms. Iskenderian's talk today is entitled Microfinance, Empowering Women, Transforming Lives. Please join me in welcoming Mary Ellen Iskenderian.
Thanks very much. It's great to be with you this afternoon, and I was really impressed by the diversity of the institutions, organizations that came together to make today possible. And we'll be talking a lot today about diversity and the value of diversity, so I was really so pleased to see so many different parts of the university represented in bringing me here today. So I thought I would start by just telling you a little bit of an advertisement about my organization, Women's World Banking. We are the largest network of microfinance institutions in banks. 24 institutions, 39 institutions, 27 countries, only working in the developing world. But through those institutions, we reach 24 million clients, 82% of whom are women. And if I were standing in front of you even 5 or 6 years ago, I wouldn't have even made much of a big deal about that 82%. Microfinance is an industry that was really built on the principles that making women financially and economically empowered was a very strong poverty alleviation strategy. But as we'll talk about a little bit more in the presentation, we've seen almost microfinance becoming a victim of its own success to some degree as it has become more commercial and more commercial capital has come into the industry. We've seen a decidedly a marked shift upmarket and away from low-income populations in general. Since women make up roughly 70% of the world's poor, that almost by definition means that we're moving away from women. And we'll talk a little bit about why that might be the case. There are a couple of numbers on this screen that I particularly want to call out. As all of you know, microfinance was really initially started around a credit model, making small loans available to entrepreneurs to build businesses. So that total loan portfolio of nearly $6 billion from the institutions in the network, is an interesting number in and of itself. But when you think that the average loan size is $1,200, that's a lot of loans. And I'll bet a lot of you are surprised that the loan size is even as large as $1,200. And that's another factor in this shift of microfinance as it becomes more commercial. The industry average is actually closer to $2,700. So the smaller loan size correlates very closely to the focus on women. And then the last number that I want to make sure you get on that screen is the $2.6 billion in deposits. And for me in women's world banking, this is really the game changer in microfinance, as we see more institutions now becoming regulated financial institutions and enabled under their local regulatory environment to mobilize savings deposits. It's giving the poor a safe place to save their money. And the poor, in the same way they repay loans, they save. And again, we'll talk a little bit more about what that entails and why that's so important for institutions to be able to keep their focus on women. We are really the last remaining truly global network. Most of the other major international players you may have heard of in microfinance, Axion, Grameen, Opportunity International, have different models, maybe working globally, but this notion of a group of institutions coming together around a shared mission is really, unfortunately, I think in a sad way, we are unique in that. The model has shifted so much towards a more commercial model. We were registered in the Netherlands in 1979, so we're a very venerable institution. The Dutch were very, and still are, very big players in socially responsible finance and recognized the very close linkage between economic rights and human rights. And I work in New York with a team of, I say, roughly 40 people, because we use a lot of consultants and people kind of come in and come out, but today we're roughly 40 experts in microfinance working with the institutions globally. I just want to say a few words about these three cogs, but we'll spend most of our time today talking about the large one, the network. And this kind of gets to that commercial model. As any of you who've worked in nonprofits or have an interest in nonprofits, it's a constant effort to work towards sustainability and to keep an institution grant funded. So we started really exploring the idea of perhaps shifting from a pure NGO into more of a social enterprise. And so in the last couple of years, we've launched two ventures that I think are not only exciting because of the possible sustainability that they would lend to the NGO, the network organization, but also because they are so entirely consistent with our mission of building strong financial institutions that continue to serve women. The first one is, the first one I'm going to talk about on the top is the Isis Fund, named after the Egyptian goddess, who was known for many, many things, but including providing support to mortal women to build life skills and build businesses. So she seemed like ready-made goddess for Women's World Banking's equity fund. This is a fund that we're raising, $60 million fund. I'm sorry, I'm going to move this down a little. $60 million fund that we're raising to make equity investments in those 39 institutions in the network that themselves are making the transition from NGO to regulated institution, are looking for commercial capital, but are very nervous about what kind of shareholders they're bringing in under the tent and what kind of returns are those investors going to be looking for, and are they going to be able to continue to serve the mission. So the network came to us and said, we'd really like you to be with us on this journey. And so we've been in the process of unfortunately, we've kind of been raising money in little chunks rather than that whole corpus, which would have been nice. But we're one by one making investments in network members as they become regulated. And then the holding company is almost at the opposite end of the spectrum. You know, microfinance has had tremendous publicity, and both good and bad, since Muhammad Yunus's 2006 Nobel Peace Prize. But it's still incredible that there really have only been roughly 150 million borrowers in microfinance worldwide. And if you think of any set of numbers you've heard about, 2 billion people living on under $2 a day, 2.8 billion people who have no access to any banking services whatsoever, you can see there's an enormous unmet demand. And if you think of just the BRICS countries alone, only India has any kind of robust microfinance sector. So we're looking to develop microfinance institutions in those unserved markets, including amongst the BRICS, India and China, Brazil and China. And so that's what that holding company is dedicated to. We're very excited. We just closed our angel round of financing and are about to close our first acquisition of a very, very small sort of shell microfinance institution in a Latin American country that I'm not going to name. But all of those, as I say, are united under our mission of providing financial services to low-income women, but they also, hopefully, if they generate the revenues that we're hoping they will eventually become revenue generators and contributors to the sustainability of the NGO. So why are we so focused on women? I often get the question, there are a lot of poor men too, and poor men and poor women together suffer some of those terrible catastrophes and shocks of poverty. But we kind of look at working with women as a really effective, efficient way to get at some of the worst shocks that a household can deal with. We see women really as a gateway or as an entryway to the rest of the household. But actually, in addition to that, there's an increasing amount of evidence available, some very interesting research being done that's showing very clear correlations that the countries that have the biggest income inequalities between men and women are actually lagging in GDP growth. And it's those countries that are recognizing that they are leaving. And the research, again, is being developed on this, but we're seeing anywhere from 4 to 9 percentage points of GDP growth year in and year out is being left on the table because countries are just not maximizing the full potential of their population by not recognizing economic opportunities for women. And then just in terms of the focus of microfinance has traditionally been on the informal sector. Those businesses that are not registered or sort of flying below the radar screen to a very great extent. Home-based businesses, women's businesses tend to be much more home-based. And so microfinance has a real niche in serving that set of businesses. So we were talking a little bit earlier about this trend we've seen in commercialization. And Women's World Banking has been doing research for several years tracking the impact of that commercial capital on microfinance institutions as they make the shift from nonprofit organization to regulated financial institution. And 2 years ago, we published a report that had looked at 27 institutions that had made this shift. And we found some amazingly good stuff. We found that the governance of those organizations usually was much more improved. They were much more transparent to their clients about what they were charging them. They were more transparent in their financial reporting. They were able to mobilize much more diverse sources of funding. And then, as I mentioned before, the whole issue of being able to now take savings deposits was a tremendous shift in their business. But one trend we hadn't actually expected to find was a very, very notable shift in the percentage of women borrowers that the institutions were servicing. So we saw the group going from year -2, 2 years prior to that transformation, being roughly at 88% of their clients being women, to 4 years after the transformation had been completed and they were now fully regulated and operational as a bank, down to 60%. Now, in some cases, the absolute numbers of women may have been larger because we also found phenomenal growth rates in these institutions, which were already quite high, but once they'd transformed, the growth was just turbocharged. But only in some institutions, and if you recognized percentage of women borrowers as a proxy for the focus of the institution, you really did see a dramatic shift. We're about to publish in literally 2 weeks' time an update of this study, and we were able to look at 87 institutions, so a much more statistically robust set of institutions. And we found some really interesting things. And the 2 or 3 years since this data was collected, a lot has happened in the sector. So the bad news was that we found that you no longer needed to have the shift from NGO to regulated institutions to see the drop-off in percentage of women clients. That both NGOs and regulated institutions, if they were funding themselves with commercial funding, that they were shifting their business. So, as I say, sort of bad news. But where we find hope, and I am a very, very optimistic person by nature, is we found real differences that investors, so if you had made the shift to a regulated institution, taken shareholders on board, we had a real shift, or a real difference that shareholders could make in the decisions that an institution took in order to maintain the social mission. And I think one of my favorite stories that came out of this publication that we're just about to release was an organization in Cambodia, not one of the WWB network members, that had become a regulated institution. And they had a very vast rural network of branches. And it was really expensive to maintain. They were very far away from each other, and the populations were very dispersed. So they made the decision, because they were under tremendous pressure from their board to get their operating costs down, they made the decision to close the rural branches. Well, guess what? That's where all the women were. So at the next board meeting, the board gets the numbers and says, well, this is fantastic on the operating costs, but what happened to all the women? And we were delighted to hear that the board members, when they heard what the decision had been and the trade-off had been, on the spot authorized a new budget and said that this was a goal that they really felt was not worth trading away and was an important part of their reasons for investing in this institution. So I have a lot of hope that this notion of a socially responsible investor really is out there, but they have to be always vigilant in being socially responsible if the institutions are going to hold on to that mission. So at the same time that we saw the industry losing the percentage of women borrowers, we saw a huge drop-off in the governance and managerial levels of women as well. And what was particularly awful to me is that this is my network. This isn't even the industry. These are the institutions that sign a pledge and have to meet performance standards requiring them to have certain percentages of women at the board level and managerial level. So this was a very, very concerning trend for us. You see the same thing again, just dropping right like a stone in senior management as well. Again, in this set of institutions that at least were paying lip service to being really committed to women's leadership. So it was out of this concern and this trend that the Women's World Banking Center for Microfinance Leadership was born. And we had been running for some time, together with the Wharton School, a women's leadership program for mid-level and senior level women managers in our network. And the MasterCard Foundation knew about our program and asked if we would be willing to consider two things: opening it up to the entire microfinance industry, but then also developing a curriculum on leadership for both men and women CEOs and their direct reports of microfinance institutions. So that's really what the leadership the leadership program has come to be. This bottom level where we have different levels of curriculum. The Women in Leadership program I've told you about. The Advanced Leadership Workshop is the CEOs and direct reports. And then some subset of those two groups are eligible for a one-on-one executive coaching program that we do. And with the partner that we've chosen has a real expertise in remote coaching. So there's still people pretty close to the same time zone. Everybody speaks the same language, but there is a capacity for remote coaching. And then probably one of the most popular things that we do as a network is the exchange program, where we bring people from different regions or different institutions together from one region to learn from each other. And so that's always been very, very popular. But then we also have an institutional development piece to the center, where the management development program is really a training of trainers from within microfinance institutions to be training mid-management, not just on how to be good managers of a financial institution, but also recognizing the need to be good managers to that social mission and really keeping the principles of the social mission alive. And then I think one of the most exciting things that we're doing through the center, and maybe we need a better name, so I'm very open to suggestions, is something we're calling the organizational gender assessment, where we go into an institution and work very closely with the HR department to say, well, you know, what are the policies you've got on your books to attract and retain and promote high potential women, but how are they actually playing themselves out in the field? And it's just a fascinating look at culture and dynamics and, you know, interesting stuff that goes on the ground. We've now done 4 of them, 3 in South Asia, 1 in Peru, and we're about to do another in Colombia in a couple of weeks' time. But some fascinating differences. I mean, just one quick example. In Bangladesh, one of the largest microfinance institutions in the world, ASA, is in our network, 9 million clients, 97% of whom are women. 12% of their workforce were women. They'd never asked Women's World Banking for any technical assistance before. They liked coming to our conferences, but they'd never asked the team to come and help them. But they were kind of, somebody along the way, somewhere along the way, had a wake-up call about this disparity between the client base and the management, and they asked us to come in and do one of these organizational gender assessments. And so we found policies that spoke to all sorts of opportunity for women loan officers. But we started digging deeper and finding things such as they had a very firm policy that when you went to collect, when a loan officer went to collect a loan payment, they should do so sort of right around the dinner hour, so it was usually dark, and the husband would be home even if the woman was the client. So he would be aware that there was a loan payment being made, and that by default sort of having some level of responsibility for that payment. Well, no self-respecting Bangladeshi woman is going to be walking around the village after dark by herself. And so they just weren't doing it. They were using time that they were supposed to be making new loans during the day for their collections as well. And so their performance numbers were commensurately lower. So once we got the organization to think about changing that, it was which was a fairly easy fix. It really was an enormous opportunity for the women loan officers to move ahead. So sort of little things like that just, as I say, sort of take the culture almost more into concern than anything else. And then the last thing is the Leadership Award. It was very exciting. We gave the first award just on Monday night at our excuse me, annual benefit dinner, where we identified the organization that not only was right at the top of our performance standards in terms of financial performance, operational performance, social performance, but that it had then gone above and beyond that in terms of the gender diversity efforts in its leadership. And I was overwhelmed by the presentations. There were 5 finalists, and the presentations that they made were very, very impressive. It was a really difficult decision. We had, our board was called in to make the decision, and Kenya Women's Finance Trust, our network member in Kenya, was the winner and had done a beautiful job in making sure that the women clients and women in the organization were sort of a mirror of each other, and it really has made their business just sing. 500,000 clients, incredible returns, and it's been a very, very good business practice for them in addition to huge social mission being achieved. This sort of goes into a lot of what I've already talked about, but one reason why this power of seeing women in leadership position has been so important at the microfinance level is in terms of the decision making, again, increasing research being done, some really interesting research out of the University of Michigan that's saying if you've got a complex problem to solve, not necessarily a simple problem or a repetitive set of issues to solve, but complex problems to solve, that a diverse group will always come up with the best solution to that problem. Now, interestingly, the Michigan research says they won't think they've come up with a good solution, and they won't necessarily feel all that good about the solution because the diversity brings a lot of conflict, and they really will have battered around the idea. But always that more complex problem is better solved, and I certainly can't think of a more complex problem than poverty alleviation. And so we really want to bring our absolutely best, most diverse team to that set of problems. And then again, we're just seeing in so many instances products being designed for women that don't ever consult the women who are going to use them or think about how you might want to design that product in a different way that does take their views into consideration. So making sure you have women involved in the design of products that are targeting women is absolutely critical, so that mirroring the market. But I think this last piece is the thing that people talk about when I go out to the field and I visit women leaders, or I visit women clients and they talk about the women leaders that they've come to know. It is such an extraordinarily powerful experience for them to see, often for the first time in their lives, someone who looks like them doing something that makes them feel like, well, maybe I can do that too. And I think that power of being a role model absolutely can't be underestimated, and has so many knock-on effects in terms of the importance and resonance of leadership. So this gets to some of the research we're starting to see, at least at the Fortune 500 level and in some of the more developed countries, some really important correlations between women either being in top management or on boards and performance of the company. And then the second point, which I think is a very, very important one, we're seeing that diversity alone is not enough. You know, you're a diverse company and you're a good company. So that's not absolutely parity. But diversity in an organization is emerging as a really good proxy or a really good indicator of a lot of other important things. Companies tend to be more innovative. There's a much higher level of employee satisfaction and customer loyalty. And so there is a strong correlation between diversity and just very strong companies in general. So I didn't realize I had a little animation here. So diversity alone is not a cause for improved bottom line, but it can be a very, very important symptom of a healthy, vibrant organization. And as microfinance transforms and evolves into a more commercial space, and I don't think we can turn that clock back. That train has left the station. Those of us in the industry, I think, have to work as hard as possible to make sure that those institutions who have such an important mission are as healthy and vibrant as possible. So just to take you through the little organizational gender assessment a bit, we really try to identify where the barriers might exist, and then come up with management on what a good strategy might be in terms of addressing those, again, taking culture into consideration, and then helping the organization implement the strategy. Why is it so important? Why would, making sure management understands, men and women understand why gender diversity is an important thing. You've got to, I'm sure you've all heard the cliche many times, what gets measured gets done. So making sure that diversity indicators are included in KPIs and the things that people are measured against for their performance. Work-life balance turns out to be an enormous issue. Childcare issues in just about every country that we're working in. It might differ a bit between whether you lose the woman after she's married or after her first child, but almost certainly by the second child, it's just very, very hard to hold on to a talented woman in microfinance. So, and I think that's often mirrored in the wider economy. So supporting any efforts towards work-life balance is tremendously important to achieving this goal. And then we started bringing out some very specific recommendations that we were seeing in lots of different places. We were seeing, for example, in Bangladesh, they were very proud of this group interview process that they had developed, and whoever sort of was a star in a group of 4 people who were being interviewed, that was a very good indicator of success going down the line. But women were almost, at least Bangladeshi women, were almost uniquely ill-suited to that interview process, and so it just really wasn't helping them accomplish that goal. We also found in the South Asian work we did that getting the family's buy-in to having a woman stay in the workforce was really important. Our network member in Pakistan had, I think, a really nice little twist on something we do here in the United States. They had a Bring Your Parents to Work day, so that the woman's parents could see that she was a really well-respected member of the community, that the fact that she worked in this financial institution and then went out amongst the clients was something that she was respected for, and not something that the family should be ashamed about or concerned that would bring some sort of stigma on them. And it's made a huge difference in their retention rates. Getting the whole set of benefit packages becomes hugely important. We were finding time and time again women facing problems related to mobility, which is a problem for women everywhere in the developing world, but including at the managerial levels. They'd be unable to get home after dark, and so they'd have to quit work earlier. Again, you'd see sort of performance being affected as a result of that. And then the whole issue of child rearing and having child care support being an enormous issue in terms of being able to keep women in the workforce. We also just found a lot of people making assumptions about what a woman would, or a man for that matter, would or wouldn't want to do in their career at a particular juncture. So you just trying to build in an more open-minded attitude and not make assumptions about people's behavior. And then the one thing that just always amazes us when we work with women is just how much women can hold themselves back and think that they don't absolutely have every box ticked on the job description, and they haven't actually completed one of each of the assignments that are listed as the criteria. Whereas often we'd find that, if men had done 2 or 3, they thought that they could show great potential for doing the other one. So building that confidence and self-esteem in women becomes tremendously important to putting themselves forward for leadership. So just to take a step back and just sort of show you where all this leadership stuff sort of falls in the context of our other work. We're finding, the microfinance model, yeah, I told you that there weren't enough borrowers, but it's been around 30 years or so. So we've got the model more or less worked out. So we know how to make financing accessible. We know about access to finance. But what we're really finding we have not yet worked out is control. In far too many countries, women will show up at the microfinance institution for the loan and then go home and give it to their husband. And so that whole issue of creating products, creating mechanisms for women to actually move from access to the financial asset and the ability to create wealth, to control of that wealth, is sort of the notion of the bridge that we're trying to. This is another thing we're testing out, so if this isn't working for you, please let me know. And we really felt that the best way for us to do that was to really clearly show that microfinance has really moved on beyond credit. And even within credit, we need to be much more diligent about making sure, as I said before, that the loan actually gets to and stays in the hands of the woman to build her business. And that becomes even much more dramatically important when you're talking about rural women who face even greater barriers and obstacles to finance in agricultural settings. Again, huge interest in building up savings. Again, a very important way for women to build and control wealth. It tends to be regardless of culture, it tends to be a very accepted sort of family role for a woman to save. So there's no real stigma by the husband about, the woman saving. And very excitingly for us, in the last couple of years, we've gotten engaged in creating savings products for girls. And there, it's not so much, creating a sustainable, profitable product for the financial institution, as much as it is for the girl to build assets so that by the time that she reaches puberty, that she's got some choices and that she doesn't necessarily have to enter into an early marriage or have to leave school. And again, the research is just so clear that an additional year of school for a girl can have probably a greater impact on her lifespan, her children's lifespan, her lifelong income level, and the lifelong income level of her children. So that one thing, just keeping her in school that much longer, can have an enormous impact. We've been working in the Dominican Republic and Mongolia with young girls there. And the next country that we'll be working, we're going to be going next to Peru, but the country after that is Kenya. And we've been doing some very early stage market research, and I was so struck that in Kibera, the large slum in Nairobi, we were interviewing girls who said that $10 in a girl's own name really was enough for her, her 12-year-old, 14-year-old girl's name, was enough for her not to choose to go off with a sugar daddy or to make really unwise sexual decisions that would have implications for the rest of her life. And so it just seemed like such a modest amount, but very exciting opportunity just from the possibility of saving. And then insurance is probably the new thing in microfinance, but we're seeing, again, giving a family a safety net and protecting it from these shocks, everything a family might have built through a micro enterprise being destroyed by an unexpected health emergency, for example, or for a family to just be completely wiped out through a drought or through a flood. Seeing a growing use of crop insurance has made really important shifts in the poor's ability to think in a more future-oriented behavior, that they can make decisions about the future when they know that the present has a level of security to it. And then the way that we interact with the microfinance institutions so that we strengthen them enough to get to the point where they can offer these products is a whole range of financial advisory services. I'm very fortunate, I think, to be based in New York. I have a whole team, I refer to them as my recovering bankers, but a bunch of really talented former Wall Streeters who can advise and guide and do a lot of risk management work with the treasury departments of our institutions. There's a lot of work that needs to be done at the operational level. We're seeing, particularly with savings, a much more creative exploration of delivery channels for savings, mobile phones, point-of-sale terminals in mom-and-pop shops, all sorts of interesting models that are being developed, particularly motivated by savings, but having a lot of implications for credit payments as well. And then, as I said before, we're really focused on the market research. What is it that a woman needs to see in that product that might just be the difference between her taking it on and not taking it on? And how is that different from the way you would design a product for a man? I think one of the most telling examples is, again, with savings, is that we consistently hear when we talk to women, much more so than with men, is when they have a savings account with a financial institution, they want to be assured that it will be held confidential. They don't want their husband or their neighbors or their mother-in-law to know that they're saving. And they want it in their name, but they want to be able to keep that information quiet. I've already talked to you about the leadership development, and we really feel strongly that with the development of this much more commercial industry, having leaders that understand that critical balance between profit and mission will really make or break the future of the industry. We're doing a much bigger effort, making a much bigger effort around marketing and branding. So many microfinance institutions never thought they had to market themselves. They're giving loans to people who have no access to funding. You know, what's the market? But once you are the one who's actually looking to take money and prove that you're a trusted institution and can be held accountable for that savings deposit, then creating that trust and creating that image of trust becomes very important. One way that we're very excited about financial education sort of runs through all of this, but one of the things that we're very excited about with financial education, because we're finding that, you know, classroom setting education for adults doesn't really work. And given that so many, almost half the women that we work with are illiterate, you know, that's just not an effective way to make sure that a woman really understands the nature of the product that you're trying to interest her in. So one of the things we're piloting, will be coming out this summer, is a telenovela, a soap opera, which has all sorts of drama, and none of the actresses have very much clothing on in the drama. It takes place in the Dominican Republic. But there are a couple of themes and a couple of plots that run through the program that are all about financial responsibility, financial education. There's a husband and wife who negotiate with each other around the use of money that comes into the house, and he wants to contribute less as she's bringing more in. There's another plot line about a daughter who's saving and doesn't want her mother to know that she's saving. So, and the funder that's funding this is really holding us accountable for seeing how many more savings deposits get opened up on the nights that those programs are shown. So we're really going to be monitoring the behavior very closely, but very excited about the potential for other types of media for getting some of these messages across. And then just that last little piece at the end of the bridge there, the peer learning. I think that's really one of the most prized gifts of being a network of institutions, is that although I have a great team with me in New York, people in the network really feel most strongly about learning from each other. And that's the reason they say that the number one reason they say they stay in the network is the ability to learn from their peers. So that's a very important part of our outreach in terms of getting more products into more institutions' hands and therefore into more women's hands. I think I've already talked a bit about the Excellence in Leadership Award that we gave to Kenya Women's Finance Trust. And I think I would just like to end there, my remarks, and take your questions. I understand there are 2 mics on either side, and if you want to line up on either side to ask questions, I'd be delighted to take them. Thank you so much for your attention.